Meantime, yesterday's massive run-up adding to an already 2018 that's been incredibly volatile for the stock market and for so many at home, your 401k. Let's bring in Jack McIntyre. He says now it's a good time to reassess your investments. Hey there, Jack.
Hey, good afternoon.
Good afternoon. So this is, the cliche when we see these massive swings, especially to the downside, is don't look at your 401k.
Yeah.
Is that right?
I agree, although I think this is probably a good situation to do kind of some self-analysis, because if the volatility we're seeing is creating some angst around your 401k, it probably means you're not positioned correctly. You probably have a little too much risk in your 401k. The key to successful 401k investment is asset allocation. You need to have some things that are in that asset allocation that are defensive, that do well when you get this type of volatility. You're seeing that in U.S. Treasuries.
Right.
If you're a long-term investor, don't even think about this volatility, or view it as actually maybe a positive that you can buy stocks cheaper and hold them for the next 20 years or so.
Yeah, I think you're talking not necessarily to people like myself who might have a few decades of work underneath our belt in which you don't look at the thing and it is what it is and you'll talk about it years down the line. But what about the baby boomers out there who might obviously don't have a few decades left underneath them, might only have a few years or a handful of years left of work, and they're sitting there looking at this thing at the end of 2018 and saying, is now the time to cash out?
Yeah, you're right. And again, it goes back to what I said earlier, because if they're that laser focused, then they have too much equity exposure, given that they are very close to retirement. Should they cash out? No. I think that the volatility that we've seen over the last few days is extreme. I wouldn't extrapolate that going into the next year. Liquidity is very thin. It exacerbates these types of moves. If they're looking to make a change in 401k, I would actually think about moving some of your equity exposure overseas. I expect the U.S. dollar to come under some pressure.
But the average person isn't going to sit there and manage their own 401k, move money overseas, move money into this. They're looking at this and saying, in the last month, I've lost 10%. And if they've been keeping money in a 401k for years into decades, that could potentially be a lot of money. So what would you say to those folks who are just sitting there and looking at the top line and saying, man, that's a big chunk of change. It's gone.
And you're right. But again, I mean, if they've had that equity investment for the last 10 years, hey, they've done very well. So, yeah, this is, market timing is tough. As you get older, the rule of thumb is shift some more money into income producing investments to offset the volatility that you're seeing in equities.
What does the next year look like for you?
So, again, I'm not in the recession camp. U.S. is slowing. It's creating stress in the equity market, particularly because the Fed is tightening. But I think bonds still look attractive. I don't see inflation. So I think it's going to be a world where I'm not extrapolating the volatility that we're seeing today. Things will calm down. But again, I think there's going to be better growth outside of the U.S., and I think there's better potential to make money in EM markets, for instance.
So, real quick, foreign markets better than the U.S. at this point, 10 seconds?
Yeah.
Why?
Yeah, exactly. Well, one is because they've already had their sell-off. It wasn't until October things started to reverse. They've already discounted a lot of news. Now the U.S. is slowing down, and the equity market is going through that adjustment, the U.S. equity market.
All right. Jack McIntyre, have to leave it there. Thank you very much. Appreciate it.
Yeah, my pleasure.